2, 1.
Welcome to Made for More Living.
One small step for man.
With Johnny Jennings.
Kick the tires and light the fires, Big Daddy.
The fastest and most exciting hour of news, events, and real estate in Northern California.
And this is a fact that was proved.
Powered by eXp Realty. Online at madeformoreliving.com.
Does everybody know what time it is?
Get ready. Here we go.
Could 2024 be the worst year on record for fires? That's what we're going to be talking about today. And in the radio station, we have Deb Tuoto. I always mess it up. I was practicing so much. Deb Tuoto.
So tell us the origin of that name.
I'm Sicilian, so it helps when you use your hands.
That's what I did wrong.
It. Yeah.
Oh, you got to use your hands
Tuoto
when you're pronouncing
exactly.
it. Tuoto.
Yeah,
There we
exactly.
go.
How did your parents pronounce it?
Yeah.
Tuoto.
Okay, Tuoto.
Yeah. So
Yep.
anybody who knows Italian, tutti is everything. So
You have everything.
we have everything.
Love it. My in-laws are actually coming back from, they were celebrating their 40th wedding anniversary, and they went to Europe, and on the trip, they actually went to Italy. So they were in France and Europe, or France and Italy, and they loved Italy way more, at least my mother-in-law did, way more than France. So
Yeah, France has gone down as far as its appeal to Americans, I think.
Oh, really?
Yeah.
Okay.
I mean, it's just, I think it's changed. It's become a lot more, it's really, I think, become more Western civilized as far as our culture and our society. And I think people like they go to Europe because they want to go to the old world. They want to experience how things were, and they want to experience history, and France is just getting too modernized.
And talk
too
with their hands and do Tuoto.
Tuoto.
There we go. Love it.
So do you have any special Sicilian dishes that you specialize in?
Oh my goodness. So I really can't eat lasagna anywhere else but at my own home.
Spaghetti factory
Come
won't
on,
work for you?
invite us over.
Well, we could do that, and we've kind of made some keto changes to the situation.
Oh,
But
that's
anyway,
true.
Yeah.
Oh, nice.
Keto
oh, man,
Italian,
you're making me
if you will.
hungry.
So we're talking about, there's obviously in California has seasonally this last, many years, had fires. And so there's been this thing called the California Fair Plan. It seems to be anything but fair, California Unfair Plan. Can you shed some light around kind of what that is? Because most people, including myself, up until recently, thought that it was a government program, and you're saying that's not the case.
It's not a government program. And I know that we make fun and that type of thing, but we are actually very grateful that we have that aspect because it's better than not having insurance at all. The other states don't have it. We actually write in a variety of states, and they don't have that aspect.
Does Texas have it?
Texas does not have
Boom.
California Fair Plan.
Boom. Boom. So
Only
Matt and I
California.
joke about moving to Texas all the time. I'm like, hey, the grass is not always greener. So, hey, in California, you can get insurance in the foothills, but it is expensive.
Well, Texas has other issues. They have the hail.
Oh.
So, California Fair Plan isn't their dream.
Got it. Yeah.
Yeah. So, yes, California Fair Plan is the larger carriers are basically, if you will, all contributing to a pot of insurance money. And the California Fair Plan says we will take care of the fire aspect of homes. It actually is more than that. It's actually the wind, too. So high winds and fire.
Fire and
I know,
wind.
There's a little something for you today.
Okay.
All right. And then
But that's it.
that's it. So what happens then is let's just use, and it's a variety of the bigger carriers. So let's just use State Farm, for instance,
Okay.
right?
Yeah.
I love State Farm. State Farm can't write California Fair Plan. They only did State Farm policies, right? So it's a full home policy with the water, the liability, and all the goodness that comes with the regular home policy. So as everybody knows, State Farm, as well as many of the other larger admitted carriers, are going through some issues right now. And so what has happened is it's become more upon our brokers. I'm with a brokerage, so we shop out insurance to take care of the DIC, or difference in conditions.
Okay.
So Fair Plan will take care of the fire, and then we write a second policy that's in cooperation with the Fair Plan that takes care of everything else.
So
but the
everything
fire.
else would be like,
Water and liability are the two big aspects of the difference in conditions.
okay. Okay. And so do you have a story or an example of of something that's gone through this before, because I was recently on a listing appointment, and the guy, crazy story. It was the middle of the day. It was in July. He went down the hill to go shopping with his daughter. His son works nights. His son was asleep, and his wife was home. And all of a sudden, smoke just starts pouring. I think it was a 2-story home, 2 or 3-story home. Smoke just starts pouring downstairs. And so the mom was like, what the heck is my son doing upstairs? What did he catch on fire? Meanwhile, they meet on the staircase because he's running downstairs because he thinks the smoke is coming from the kitchen. He's like, what in the world is my mom doing, in the kitchen? And then they have this moment and they realize, oh my gosh, the house is on fire. And luckily they were able to get out in time. But now they're fighting with the insurance companies, and it's how often does somebody have to go through that? Like I don't know anybody besides this person who's personally like shared their story, and so it's a lot of unknowns. So can you kind of walk us through what that looks like what your experience has been or your story?
So that is, I would say, a dilemma with having this separated out, because when you have a full homeowners insurance policy, it's easier to go through claims because you're just dealing with one company. When you have a California Fair Plan policy, you have the carriers have to differentiate. So if it's smoke or if it's fire, it has to go to California Fair Plan, right? So the other carriers are not going to take care of that if you have a California Fair Plan process. California Fair Plan, with their claims, it's up to their carriers to come up with how they're going to make that replacement. And therein lies the dilemma. But that's a dilemma with every carrier, every single carrier. When it comes down to claims, they want to know specifics of what's going on, and then it's going to be percentages and who does what and where.
Yeah. So do you have a story of like somebody that's gone through this or had a California Fair Plan in place?
I do. So I had a client that was involved in the fires up in Tahoe a few years ago.
Yeah.
For him, this was a second home, so it wasn't, it's still important. It's an investment, but he didn't have to go through the evacuation process, if you will, right?
Yeah.
So, but it's still nerve-wracking because you have no access to know what's going on with your home. Everybody's evacuated. Nobody's allowed down the roads. So when you finally do get to go through there, you have to wait until the debris is removed from the roads. And when you finally get there, have you ever been at a home that's been burnt to the ground?
Absolutely. Yeah. You got to like remove all, like there's what do they call it? Hazardous waste has to be.
Yes.
Yeah.
So it takes a while to get back to your house and you don't know what's going on there, right?
Yeah.
So at least he wasn't in a gym or in a church waiting. He actually had his other home to be in. So he finally gets up there, and we get up there, and all that's left of his home and the neighbors on each side was just ashes, melted appliances, and a chimney.
Yep.
So at that point, we're standing there, and that smell just stays. It's like your face is in a ashtray kind of thing. It's horrific. And then the emotions that go with it. So at that point, really, I was glad that we had the right coverage for the client instead of we were worrying about rate and he doesn't. Because I knew standing there that he was going to be taken care of. I knew it. So anyway, he ended up replacing the home. We went through California Fair Plan. California Fair Plan said, okay, we're going to give you this check. He has to turn in what the dwelling the contents were. They weren't necessarily replacing everything because he didn't have everything recorded as what was in there.
That's a key point too that I was learning from this other guy. It's like you need like pictures, receipts. Like if you want to get the most out of the insurance company, and this is something you're paid for. Like you're not like trying to cheat them, but in order for you to be in compliant and get those monies,
you've got to show
need to
them
have documentation.
Yeah, exactly. And there's apps on the phone. Home app.
Really?
Home app is great because you take a picture of the item, you put the receipt in there, shows everything, and then you just provide that. But anyway, so he ended up not wanting to rebuild the home because the whole place was devastated.
Yeah.
And what he ended up doing was he still had money to not as much, and then he built a home somewhere else and sold the property. So that is an option. You don't get your full amount back, but he did get some monies to move.
So what's the typical ratio? Like 100% of replacement cost if you're going to rebuild versus if you just want the cash?
Yeah, That's up to the claims
It
department.
varies wildly?
Yeah,
Okay.
that's up to the claims department. So for his home, we had Fair Plan does 125% extended replacement. So we had the value of his home plus 125%.
Okay.
Okay,
So if it's $400,000, what would that be?
so then it's going to be $500,000,
There you go.
right?
Yep.
And so he had plenty of coverage, and I knew that he was going to be well. So that's another reason to be sure that on your insurance you have the right replacement value. You have to have it, and get that extended replacement every time that you can.
So extended replacement being that extra 125.
Yeah. So like on some carriers, like for instance, Farmers used to have 150% extended replacement. We have carriers that have 150% extended replacement. Fair Plan only allows 25% extended replacement.
Okay.
Because the main dwelling replacement, there's other items that are rated according to that number. So you get more bang for your buck by getting your extended replacement if you're allowed to.
Got it. Interesting. And so when we come back, we will be discussing about the number one thing that you see that mistakes people make when paying for or getting their homeowners insurance.
Mike, as a soccer coach, I realize how important it is for a team to work together. You can't win a game all by yourself. You need the whole team to do that. And that's the case with Johnny Jennings and his team at Made for More Realty. Recently, they helped Jessica and Brian. They were selling their home and retiring out of state. They needed to make the most money possible because a large portion of their retirement fund was tied up in the equity of their house. So, with the help of Johnny Jennings and their team at Made for More Realty, they were able to get them an offer $35,000 above list and help them make a smooth move out of the state.
Yeah, and that's the cool thing about the Johnny Jennings team with Made for More Realty. There's so many realtors that are just one-man shops, and so you can't quite get everything done that you need to get done. Johnny Jennings has a full staff dedicated to making your home selling process the easiest and most efficient it can be, which is why they've been voted the number one team in Roseville for the last 3 years. So if you need to sell your home and you want to get the most you can possibly get, even at least 3 cash offers for your home, expect more, get more with Johnny Jennings and the Tom Daves team at Made for More Realty. Just Google Made for More Realty today and get more for your home. License number 198-2171.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So we are in the studio today with Deb Tuoto.
Tuoto. That's fun to
We
say.
got it. You just got to use the hands.
Did your kids have a hard time in school when the teachers were trying to pronounce their last name?
No, remember we'd homeschooled for
Oh,
much,
that's right. There you go.
And I had married an Atkinson, so they were.
What's
they
an
were-
his
Atkinson.
last name is
Yeah.
Atkinson.
Atkinson, yeah.
Not related to
Swedish.
Dan Atkinson from KCRA 3, right?
No.
No, okay.
Not that I'm aware of.
Not that you're aware of. Maybe if you go far enough back, we're all kind of related. So.
Dan Atkinson is a legendary news reporter in Sacramento, probably the most legendary
he is.
news anchor in Sacramento, Dan Atkinson.
Almost as legendary as that morning show guy on The Fish,
Yeah.
Matt Bijou.
That guy.
Yeah. So we're talking about the exciting topic of insurance, and while it's not necessarily riveting, when you need it, like you are
it
so
is.
thankful that you have it. But sometimes people they think they have insurance and that they're covered, but maybe they're underinsured. So can you speak a little bit about that, Deb?
Absolutely. Also, in cooperation with that, the fact that it's so much more difficult to get insurance now.
Yeah.
How do we do that? And with the rate hikes and with having to go with California Fair Plan and a DIC, it's more than doubled for most people.
What's DIC?
So difference in conditions has to cooperate with the California Fair Plan because the California Fair Plan only takes care of fire
And wind.
issues and wind. See, look
There
at
we go.
that.
I'm
You
learning.
listened. And high winds. So you have to have another carrier take care of the water, liability, etc.
And
All
that's
those
the
other
D-
things. That's the difference in conditions, the
DIC.
RAP or the DIC.
Got it.
All that lingo goes together.
Got it. And so somebody, how can somebody be underinsured? Like, how does that come to be?
So with California Fair Plan, it's in a way a cafeteria situation. So the agent has to know what they're doing. So you put in what the dwelling replacement is going to be, and that's the key on that one right there. So sometimes agents will think they're saving the client money by making that a low value, but when I put that value in, I have to remember my client where I was standing in front of that pile of ashes. Did I feel good enough that that person was going to come into a situation that would bring them back to normal from their financial investment, correct?
Yeah.
Or if it was a family, are they going to get another home that they're going to be able to live in? So with California Fair Plan, they made a couple changes where you have to go to a replacement cost estimate, and every realtor knows that when you go into escrow, you have to provide a replacement cost estimate for the home. So we cannot be under that number. And California Fair Plan recently is also asking for replacement cost estimates.
So do those replacement cost estimates have to be updated annually?
Not so far, no.
Okay.
And so that's.
So if somebody bought an insurance and they've been in the home 10, 15 years and they haven't updated the value, maybe that's how they end up being underinsured?
So it will be, there is another aspect of insurance that will keep adding to the value of the home. Okay, but unless it's a super old home, then California Fair Plan won't do that.
Got it.
All right, so we've got California Fair Plan, we've got a DIC, and let's just say Anne has lived in that home for 30 years. She's been with, let's go with Farmers this time. She's been with Farmers for 30 years and never has made a claim. She's paid under $1,000 a year for that policy. It's a smaller end home, if you will, in California. Now she's looking at a policy that could be $13,000
a year. Yeah.
Right? So I'm on a fixed income. How do I do this?
Yep.
So when the California Fair Plan, you have to realize that you are only going to use that in a worst case scenario. So what I do for my clients is I really bump up that deductible. So instead of the $1,000 deductible that Anne is used to, we're going to be looking at a $10,000 deductible or $25,000 deductible. Because when it comes to replacing her home, before the insurance company puts $500,000 into that home and you only have to pay $10,000, it's insignificant at that time.
Yes.
Right? And that's the only time you want to use Fair Plan.
Okay.
Right? So that's how we help save our clients on the rate of Fair Plan.
Okay, and you also so if somebody is, because I deal with this all the time in the foothills, and what's interesting too is the maps are changing. Like what's considered a high fire zone,
They always are changing.
Like I didn't realize. It just seems like where were we?
And they change between carriers.
Los Lagos. Valerie was selling a house in there, and turns out in Granite Bay, that's a high fire zone.
Yeah.
And we had no idea. So.
And here's a little bit more about the Granite Bay area and San Francisco. They're both going through similar situations. Is that usually the residents have been with some of the admitted carriers, State Farm, Farmers, Allstate, Kemper, Safeco, all those carriers that we're all used to hearing.
Yeah.
All those carriers are pulling out of California for the most part.
Yep.
Right? So now all those residents are now looking for insurance. So where do you go? Right. So the brokerage, we have a couple hundred carriers that can take care of them, but not all of them are going to cover in that same area. So I go out to the carriers that are accepting. Now we may have to step out of admitted carriers. Admitted carriers are like those big carriers that I talked about. Admitted means that, let's just say Safeco covered all the homes in San Francisco. San Francisco burned to the ground. Then Safeco would have to go to the state to get a little bit more money to pay off all those policies. First off, Safeco would never do that, but I'm just saying as a story, right?
Yeah.
So that's what an admitted carrier is. That's the biggest aspect. Non-admitted carriers, there's two versions here. There's A-rated and there's B-rated. B-rated are just, they're going to be the ones that usually have the lower rates and a lot of times can, to me, and I'm sorry to say it this way, kind of are fishing people in. But when a catastrophe happens,
They won't
they're
pay.
gone. They're gone. Right?
Yeah.
So we only work with the A-rated carriers. The A-rated carriers will offer full policies, but they're not going to be usually as expensive as a Fair Plan and a DIC for the most part. But they are a non-admitted carrier. But they limit how many policies they will take. So maybe I have this non-admitted carrier A on your home, on your block, and you're like, oh, everybody go see Deb. We have this carrier that will take care of us. And then the carrier's like, no, we're only going to do that house. We're not going to do any more in that area because then we won't be able to keep our A rating because now we're overextended. So that's what's happening quite a bit right now is carriers at max capacity for the area.
But what I love about your company, TWFG is that you are a broker. Like, I didn't even know there were such things as insurance brokers until a few years ago. And do you mind just explaining the difference between like somebody who has gone to the same company and they do the home, they do the cars, they do everything,
Right.
But that's the so like a State Farm.
That's a captured agent.
Captured agent. That's
yes.
the term. Yeah. So a captured agent versus a broker.
Yeah. So if I'm a captured agent, like when I was with Farmers, I was a captured agent with Farmers. Farmers has something a little different, so maybe that wasn't a good example because Farmers does have a few other
broker options.
Broker options, if you will. But State Farm, let's just say. State Farm is a totally captured agent. They just recently started doing California Fair Plan because they're not able to get more policies.
Yeah.
Right? And then as a broker, I am not a captured agent. I have, like I said, 200 carriers.
Instead of one.
Like
State Farm.
Yeah,
That's the one.
Exactly. So, like I said, I can find the right one for you and your situation. It may not be the same for your neighbor, and it may not be the same for the neighbor that's across the street. But I have a variety of options, and options are huge right now in this crazy insurance market.
Yep. I don't know how many times people come to us and go, "Hey, we need help with insurance," and then we end up referring them to a broker like yourself, right? Where it's go talk to Deb. Go talk to Deb, and because there's way too much. I can't. Normally it was just like go to this preferred guy at this one company. But they're not even writing policies anymore.
Exactly.
So now we're going to a broker, and it just feels like a little bit more safe. The clients like it because it feels like more options, and it's the white glove concierge service that you provide.
Yes.
Because like you guys you don't run ads. Like we won't see ads on the television for your company.
Nope.
It's referral based, and it really like we were speaking off the air about how to protect people because a lot of people think that their insurance premiums will only be affected if they file a claim, but that's not the case, right?
That's not the case.
So can you share a little bit
And they're going
about...
to be seeing that this year especially. All the carriers are being allowed by the state of California to take a larger rate increase than they ever have. I mean, California's trying to entice the State Farms and the Farmers and all that to come back into play. Let's all pray that actually happens because the more carriers, then we start talking about we have better rates, even though they're going to be higher, right?
Yeah.
Because if we have A, B, and C all offering for the same house, we need to, then the rate starts to come down. So that doesn't look like that's going to be happening anytime soon. But I know we're talking about homes, but it's also happening in the auto market right now.
Yes.
Right? The auto market, off the charts, crazy expensive right now. And there's no love going on. If you miss a payment, that's their excuse. They're done, right? You've got to go somewhere else. So there's not really a shopping situation in the insurance market right now, right? You stay where you are. Now, you get in a new home. Something else that comes into play with the new homes is, am I going to be able to get my loan? Now, this is insurance is much more than what anybody ever planned on, right? So we are very good at trying to manipulate the numbers without under-insuring the dwelling.
Yeah.
Because that's illegal and unethical to me.
You can get the deal done, but then what happens?
And then what happens?
Yeah.
So I've done things where I've decreased some of the other aspects of the insurance.
Like what would be a safe thing to decrease?
So like instead of water at 50,000, we go to 25,000.
Because it's not likely.
Yeah. And then what will happen is after escrow, I contact the client and say, okay, let's get this back up to where it should be. And then they just pay the difference, which is usually insignificant, but it was enough in dollar-wise to get them through the situation.
Got it.
But I'm not underinsuring them, right?
So you don't underinsure them, and you can also raise the deductible or two ways.
So you can only have usually most carriers will only allow the deductible to be changed at renewal. So whatever the deductible is going in, that's what it's going to stay.
Okay? So you can't do a quick change there, but that's another way to keep your premiums low is to increase the deductible.
You don't want to use insurance anymore for anything except catastrophic. You don't want to call carriers anymore and say, hey, should I make this claim?
That's what I was. Yeah,
Yeah.
let's talk about that because
Yeah.
I didn't realize just calling
Yeah.
left made a mark on your
Yes.
what is it called, clue report?
So yes, clue report is there. Insurance record, if you will, like a credit record, if the type of
Yeah, it's
essence,
your
if you
FICO
will.
score for insurance.
Exactly.
Yeah.
So if like I had a client who called in she's like, hey, not to us, she was with another carrier. Should I make a claim? The roof leaked a little bit and got in. Well, they weren't going to cover the claim, but that claim is still on her record. Okay.
So that still impacts her.
That still impacts her. So they're not going to increase her rate. But what happened was then there was a storm and she had a real claim. And then there was a pipe break and she had another real claim. So that's 3 claims.
Yep.
So the carrier said,
well, 2
"You're
real
out."
claims, 1 call.
Yep.
And that was her 3rd strike.
That was it. So then she was done. So then I could not get her in with another admitted carrier. They wouldn't take it because the water claims follow the person. So even if she went to go live at another home and purchase that home, those water claims follow her there.
So even though the home that she may have been in previously maybe was older, maybe needed to be replumbed, she's now in a brand new home, brand new plumbing, she couldn't get insurance from an admitted carrier like a State Farm, Farmers Geico.
More than likely.
Really?
Yeah, I can't say all because, right, we don't know until you rate the particular home.
Okay.
So then we had to go to our higher end excess lines. And so now she's paying $9,000 a year for insurance versus the $956 that she had.
Wow.
Right.
And so, well, that's great too, though, that at least you have like a brokered options, like you have options for her to choose from. But this could have all been avoided if on that first call,
she called me.
She called you instead of calling the insurance
her
company.
agent. Yes.
So if you're listening to this and you're thinking, hey, should I file a claim? Don't call the company.
Call your broker.
Call your broker.
And so with many admitted carriers and captured agents, they have to put that in the record.
Oh.
So that is another advantage of having a broker because we're your liaison and we will help you through that.
It's almost like calling your lawyer.
Yeah.
Right? The lawyer's not going to necessarily disclose, to a third
That's a
party
good
what's
way to
going
put
on.
it. That's a good way to put it.
So Deb the lawyer / insurance broker. So so that's a huge. That's my
huge.
biggest takeaway was because we get calls all the time. Hey, I call my insurance company and they said they won't cover it. What they don't realize now is how long does that stay on your
so that's
report?
On various carriers. Water is usually I've seen it on there 2 to 3 years.
Okay, so it's years.
Yeah, it's years.
Is there any way to get that information off, or is it just there?
I have not seen a way to get it off. If there is, great. I have not seen a way. It used to be that we could do that type of thing quite easily.
Okay.
It's just a very, very tough market, and carriers are they only want super clean records.
Okay.
Yeah.
So if somebody's looking to buy a home, in a high fire zone area, like how can you help them better than say your average insurance company? Like what would be your tips? You have choices. You have options.
I have options. I have ways to do this. And like I said before, California Fair Plan, people say it's the unfair plan, but
at least
thank
it's
goodness
there.
it's there. Thank goodness it's there. And our agency is very, very good in working with the Fair Plan. We have direct communication with them, and so I haven't had issues as much with them as what could be happening.
So the last question I have for you before we wrap up is the whole conversation around forced insurance.
Oh, yes.
Because this is something, again, like similar to being aware that you should call your insurance broker, not call the company when you have a question about a claim. Forced insurance, a lot of times people think they're saving money or this is a hack. Can you explain kind of what it is and why it's bad?
So I had a gentleman last week. He hadn't paid his insurance bill, so of course the carrier cancels.
Yeah.
And then his mortgage company calls him and says, hey, we're going to do forced coverage on you.
Because you're required to have homeowners insurance.
Because you have to when you have a mortgage.
Yep.
It has to happen. And so the mortgage will put forced insurance on there is what we call it.
Okay.
That insurance really only covers his mortgage.
And it's expensive, right?
And it's very expensive. So
if he's living in a house, he put 20% down, been living there for a while, it's worth $500, he owes $250. The insurance is going to be more expensive and it's only going to cover that $250,000 balance, right?
So no water, no liability, nothing like that. And liability in California is huge right now. Huge. So he's not being covered. So I spoke to him and I said, you are at great financial risk in this situation. Your mortgage is covered, but what happens if you lose that house? Worst case scenario. Because insurance, that's what I'm supposed to talk about. Worst case scenario.
Yep.
Right? So he's standing there on the street with his family and no house. Now what? Well, his mortgage is cared for, but he doesn't have any money to go invest in another home.
Yeah, no money because it all went to the bank.
It all went to the bank. They get all the money for that, right?
Yeah.
And so let's just go to another side of that. Let's go with somebody who was walking up his driveway, tripped and fell, and decide they're going to sue him, right? They're going to sue him for a couple $100,000. That's so common nowadays. Where's he going to get that money? Not from insurance. They're going to garnish his wages to pay that $200,000.
Really?
Yeah. So it's pretty. A financial risk is not enough of a word for that, for the forced insurance.
That can change not only your life but like your kids' lives.
Yeah, and your future.
Yeah.
Right. All your.
Yeah.
It's pretty intense.
And so I know I said only one more question. Can I ask you one more?
Yeah, absolutely.
Okay. So Airbnbs. We were just talking about this.
Yeah.
We have, I have a dear friend. They're looking to rent out their home, and you were like, "Oh, they better update their insurance." I didn't even think about this. Like, what's the difference between regular homeowners insurance and Airbnb styled insurance?
So Airbnb insurance are short-term rentals. That means that the people don't have the love for the dwelling that you would as an owner, right? And the liability risk is off the charts, right? Say they eat
tripping on the sidewalk again.
Right, exactly.
Yeah.
Or they're drinking and something happens, somebody hits their head. It's the major breadwinner. I mean, we're trying to go to worst case scenarios. That's going to be a huge liability suit, and it's going to be all on the owner. So the insurance is a little different. It's not that more expensive, but it is different.
It is different?
It's very different.
Okay.
Regular homeowners insurance will not cover any of that.
So there's homeowners insurance. There's like landlord type insurance,
Landlord insurance.
for like traditional rentals. There's Airbnb, which is short term. Is there any difference between short term and midterm, or is it all the same?
No, it's about the same.
Okay.
Yeah.
But if you're thinking about doing short term or anything along those lines, you want to make sure that your insurance is updated. So just reach out to your insurance broker.
Yes, because it's a completely different policy.
Okay.
If you will. It's just like if you had a landlord property, you don't throw a homeowner's policy on that landlord property.
Yeah.
Why? Because the liability is much higher.
Yeah.
And, on landlord, that just opened another can of worms. Landlord, you don't have the contents that you have to cover.
Correct.
Right? It's just the dwelling and liability are the main aspects.
Yeah. So thank you so much for coming on the show today. We talked about the California Fair Unfair Plan, why it's special that we have it, and how to keep your premiums lower. We talked about the benefit of going with like a admitted carrier versus a broker, which is what you are. You have hundreds of options instead of one.
Yes.
We talked about how to avoid getting a mark against you with the insurance companies by calling the insurance broker directly rather than calling the insurance company.
Yes.
And what else did we cover? We covered Airbnb insurance is different than regular landlord, or even homeowners insurance.
Yes.
What's the best way, aside from reaching out to us? You can always just Google Made for More Realty. Ask, hey, who was that fantastic insurance, Deb Tuoto, that was on the show?
Be sure to use your hands.
And we can connect. Yeah, you got to use the hands and connect you. But if they want to reach out to you directly, what's the best way?
So the best way is actually email.
Okay.
I know that sounds so old-fashioned, but like we said earlier, we have a lot of clients that are referring to us because we have such amazing customer service. We still keep that as number one. So D Tuoto.
Tuoto.
Yeah,
Sorry, go ahead.
That's okay. D Tuoto at twfg.com. So that's D for Deborah, Tom, unicorn, ostrich, Tom, ostrich, at TWFG. The wood. Oh,
It's the name of your company.
Yeah, I know. It's the name of my company. TWFG. Tom, Wood, Frank, George.com.
Awesome. Well, thank you so much for being on the show.
Thanks so much.
So, Matt, I'm sure you've experienced something like this in the past. When you find someone who treats you well and has great customer service, you go back to them over and over again, which is why I have the same person been cutting my hair for the last decade. And that is
they're doing a good job, you think?
I think so. Do you not like it? I got it just cut. Anyway, Betty experienced the same thing. She worked with Johnny Jennings and the Tom Daves team at Made for More Realty to sell her home, which was a really tough situation that they had to figure out. And so when it came time to sell Betty's mom's home in Roseville so she can move into a retirement home, of course, Betty's first call was Johnny Jennings and the Tom Daves team at Made for More Realty. They did a great job once. They did a great job the second time, and she's continuing to use them and tells everyone she is the best because they found the perfect buyer for her home and negotiated a quick as-is sale.
Yeah, they won't cut your hair. They'll do a terrible job with that, but they will get you at least 3 cash offers for your home in as-is condition. No need to do open houses or showings or those much-needed repairs. At least 3 cash offers when you reach out to Johnny Jennings and his team at Made for More Realty because you expect more, so get more. Just Google Made for More Realty today and get more for your home. License number 1982-171.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So apparently I've been doing something wrong for well over 6 months.
I know. I should have told you a long time ago.
Yeah, and I'm not talking about something my wife corrected me on because that's a daily thing.
Yeah.
But I've been saying realtor for like 6 months because I thought that's how you say it. I'm pretty sure, Johnny, I've heard many people say it that way.
Oh, absolutely.
My realtor, my realtor, my realtor. I'm pretty sure most people say it that way. And you're saying, no, I've been saying it wrong for 6 months. You've never said anything until
I know.
recently.
I felt bad. I mean, I used to say it that way too, and then somebody corrected me.
Oh, there you go.
Yeah.
So realtor is a common way to say it, but it's not the correct way.
It's not the correct way.
And so I thought the correct way, when you correct me, it's realtor. Realtor. Is that not the correct way either?
No, it's not. It's pronounced, as I was told, it's pronounced the way it's spelled. So there's no T-E-R at the end, so it's not realtor, right?
Right.
Realtor, it's realtor.
Realtor.
Realtor. I think it's uncomfortable. I don't like saying it, but
it sounds, I don't know, it's more fun to say realtor.
I agree.
Realtor.
They should change it.
Something like that, but it's realtor. Realtor. That's just harder to say.
It is. I don't, like I said, I don't like it, but
I would do a survey on your clients. And don't tell them anything. Just do a tally of how many of your clients say realtor or say realtor.
Some people get fired up about it though. Like when you say it incorrectly, you say realtor. That's why I was corrected because somebody was very
adamant.
You are in this industry and you're not even saying it correctly. And I'm like, well,
I feel like if you're in the industry, yeah, you should say it correctly. But on the other hand, if your clients are saying it a certain way, there's no need to correct them and make them feel bad, right?
No, just let it ride.
Yeah, that's why you never corrected me for the past 6 months. We've reached the point in our relationship where you feel comfortable correcting me.
Correct, yeah.
That's the way it is.
Yeah, I'm not afraid to go, Matt.
Okay, I wanted to ask you a question about this video that I saw. Is that okay?
Let's do it.
Okay, I saw this video of this guy, and he's just having a great day. He's a realtor.
There you go.
And he's just pumping the music. It's a Friday afternoon. He's feeling good. Obviously, he probably just closed a home, and he's just feeling great. And then he plays a message on his phone, and it goes like this. Hi, this is Sarah, and so I was talking to my brother, and he says that it's probably just not a good time to buy right now. He thinks the bubble's going to burst. And also, his cousin's sister, she bought a foreclosed home, and that's probably what I'm going to do. But thanks for taking me to see 27 houses. Have a great day. Ha ha. Has that ever happened to you? Something like that?
Oh, my word. Yes. Yes.
Does it frustrate you?
Oh, well, of course. Like you. So here's what people forget about the real estate industries, realtors specifically, is we don't get paid until you get what you want. You go to a doctor, you have to pay them, right? You have to pay them whether or not you get better or not. You have surgery, whether that back surgery, neck surgery, knee surgery is a success, you still pay them. Mm-hmm. You still owe the money, and your knee still doesn't work, right? You are involved in a lawsuit. You hire an attorney. You're getting a divorce. You hire an attorney. Whether or not you get what you want, you still owe that attorney money. That's completely different in the real estate industry. The real estate agent only is paid when you get what you want. All parties have to agree, and you get what you want, okay? So when somebody's working with us and we've gone through we've showed them 27 homes. We've gotten them pre-approved with a lender. We've done all these things for them. And then they say, hey, I'm going to change my mind. Hey, I want to work with somebody else. Hey, thank you for doing all this. But now my brother, who sells a house once every 10 years, is going to kick me back some of his commission. It's a better deal for me. It's very frustrating, but
because I would assume that obviously you've taken hours and hours out of your day, given up weekends, given up time with your family,
yeah,
and not to mention gas money and all this stuff that you're putting out there for this person, serving this person.
Correct. Yeah,
and it could be months of your time. And then all of a sudden they just change their mind. That can be pretty discouraging.
It can be discouraging, but it's part of the industry. And so where I have found it to be most discouraging is when that was my only client. Like when that was the only person I was working with, and now I have nobody else to work with. I have no potential paychecks, coming up, and that's super demoralizing. But if I'm working with 10 people and one of them says, hey, you know what, I think I found a better option. I'm going to go with my cousin who's been in the industry for 6 months and hasn't sold a house, but they're my cousin, then it doesn't sting it still stings, but it doesn't sting as bad.
Right.
So, in fact, but what does sting is when you give your all. So, for example, there was this property. It was referred to us by an out-of-area agent, and we've sent her a lot of business. She sent us a lot of business, and she sends us this client, and they were like, great referral. Referrals are typically, these are the appointments you want to go on because they have a good relationship with somebody else, and now that good relationship transfers to you because they trust that person. And so we go on the appointment. They love us. Great. We get the listing agreement signed, and then all of a sudden things start getting shaky. And the photographer was like a couple minutes late, and they said, hey, we don't want to work with your photographer. He doesn't respect our time. We're going to have somebody else. And so the photographer stayed there. He stayed there and waited, and I drove to meet them immediately. This was on a Saturday morning. I dropped everything I was doing. I drove to meet them immediately. The photographer's still waiting there. They had brought somebody else in, like a friend, to shoot the home, and they were the most horrific photos. And so, but then we pay for the photos, and we pay for our photographer to then go through and provide the full service that he did, because this other local person, like their friend, didn't know what they were doing, and so we double paid for the photography. Then we incentivized, gave them more money to help with a process, like a problem that they were having, and then we've done all this stuff, and then they decide, hey, you know what? Thanks for all this, but we decide we're not even going to sell the house. And it's like, you got to be kidding me, And so I would ask.
I have a question. Don't they sign a listing agreement?
Yeah, but it's their house, their rules. We don't lock people into
I don't understand what goes into a listing agreement. So it's not like a contract where if you drop out, there's some kind of fee or anything like that.
So everybody does it differently, and how we do it is we don't want to lock people into contracts. We want to earn your business.
Okay.
So if at any point in the process you decide, hey, plans change, you don't owe us a dime. Even though we've spent thousands of dollars investing in getting your home sold, you still don't. I get it. Things change. But like, let's say you were going to get a job and now that job transfer falls through. Like, there's things outside of your control. That's what it's designed for. It's not designed for, hey, I just want to see if I can dip my toe in the market, and if I can't get this perfect house in this perfect timeline, then I'm just going to back out. That's not what it's designed for. We still honor it, but that's not what it's designed for. But you're right. Some agents out there do lock you into a contract. They will not let you out during the term of that contract. There are some that you will owe them money if they want to cancel early. Yeah, but that's not how we operate, and that's why we have over 800 5-star Google reviews.
Right, which brings up another topic, and we can talk about that in the next segment. Is I saw a recent survey that said, or asked the question, would you prefer to work with somebody you trust or somebody that's proficient and skilled and experienced? So let's share what people said in the next segment.
All right, let's do it.
Did you know that you can get at least 3 cash offers on your home in as-is condition, no showings, no repairs, when you reach out to our friend Johnny Jennings? Just Google Johnny Jennings and the Tom Daves team at Made for More Realty and find out what kind of cash offer you can get on your home today.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So, Matt, this new study came out you were talking to me about, and it was trust versus experience.
Correct. Or skill or talent, however you want to put it.
Okay.
So I forget who did the research and did the study, but they asked consumers, not just real estate, but consumers of all different kinds of products, could be a mechanic. Would you rather work with somebody you trust, or would you rather work with somebody who has experience and skill in their profession?
Yeah.
And surprisingly, and maybe it's not a surprise to you, majority of people said they would rather work with somebody they trust than somebody that has more experience and talent and skill. I thought that was interesting.
That totally makes sense, especially in the sales world, because so many people are worried about themselves and they think that the real estate agent is just in it for them. And that's not a good feeling if, hey, this person's supposed to be my guide. They're supposed to have my best interests, in mind, but I don't really trust that they do. Like, how can I filter what they're telling me to do through if I don't trust them? Does that make sense? Like,
yeah, I think so. I mean, you could relate it to going to a mechanic. They could appear that they have all the skills and experience and talent in the world, but people still have that trust issue when they go to a mechanic. Are they telling me, are they being legit and upfront with what's wrong with my car, or are they just trying to upsell and
they may be
make a buck?
They may be a great mechanic, but are they telling me what's best for me?
Yeah.
They can totally fix the problem, but are they also upselling me? Are they including things in here that maybe aren't required?
Yeah.
And
but
so
let's say you're sick though, and you go see a doctor. Would you rather have a doctor that's really talented and skilled and the best in the business to operate on you? Or would you rather have somebody you trust?
So I would still personally.
But maybe that's a different sector. I think maybe you're right. Maybe if you're a patient, you're not necessarily a consumer. I think maybe that the
I think it's still true though.
Do you?
Yeah, because I am super scared. I'm just, what is the phrase? This guy I was working for in college, he gave me this phrase, and I've never forgotten it. It stayed with me, and it's never let me down. And he said, "Only believe half of what you see and none of what you hear." Only believe half of what you see, none of what you hear. And so when it comes to doctors, they're telling me, hey, this will fix you, this will make you better, you need to do this. I'm like, I'm believing none of what you're saying right now. Because there's a lack of trust. And so if my doctor says, because here's the thing, for a doctor example, if you go to a chiropractor, they're going to say, hey, if we adjust you, this will solve the problem. If you go to a physical therapist, they say, do these exercises, this will solve the problem. If you go to a surgeon, and they're going to say, hey, we just need to do the surgery, this will solve the problem. I need somebody that I can trust in that situation. So when you're going to a real estate agent, you need to make sure that, so what's more important, this wasn't covered in the survey, but what's more important than trust is certainty. So what a client wants.
How do you define certainty?
So certainty is when a client's hiring us, they're hiring us because they want to be certain that we are going to get them the most amount of money for the home or get them the best deal on that home.
Right. Well, I would say trust is an important factor of that certainty.
Absolutely. And so trust goes hand in hand with that certainty. And so what they're hiring us for isn't necessarily for our experience. They're hiring us for that certainty that, hey, this person can guide me through this process.
So then my question is, if you understand that trust is the most important thing to your clients, then how are you earning that? What strategies are you using and utilizing with your whole team to earn that trust? How if you know that is so key and so important, what are you doing to earn that trust?
So there's a couple different things. One is our Google reviews, right? We have over 800 Google reviews. And so you can see what other people have said about us. So that way it's not us telling you what other people have said.
But I'm only going to believe half of them.
Hey, so then we have 400 5-star Google reviews, right? And so one, that's that third party, verification. We are rated A+ with the BBB. So there's that third party, validation. And then there is communication. So much uncertainty and mistrust springs up in a lack of communication, in a communication void. And if you are communicating effectively, clearly, and commonly, like a lot with your client, then you are going to naturally build that trust.
I like that. I don't think I've ever heard that before. That good communication, clarity, I think you're right. That earns trust. That develops trust.
Absolutely.
That's a great point.
Like
if you're not doing enough of that, you could be losing the trust with whoever you're working, whether it's a coworker, a boss, a family member, a friend. Good communication is key. You're right. That's good.
It's absolutely critical. And so if your real estate agent is now within reason, right? If you text your real estate agent and they don't get back to you in 10 seconds, then okay, that's not. Give them some time, right? If this is real estate. This isn't like the house isn't burning down.
Right.
This is typically same day, next day type of a response is more than adequate. But if they're not responding, and it is an emergency, or they're not responding, and they said they would,
you lose that trust.
And you're losing that trust. And oftentimes the reason why somebody isn't responding is they don't have the answer, or they're trying to figure it out. And so if you're not getting that fast response,
or you're not a priority to them,
or you may not be a priority. Yeah, that's very true too. And so communication is key. And then the last thing I would say is doing what they say they're going to do. So if I say I'm going to do X and I'm delivering Y, then there's an incongruity. I'm having trouble speaking today.
That's a big word. That's a $5 word right there.
That's a $5 word. It's incongruent, and that fosters mistrust.
Sure.
And so if I say I'm going to follow up with you every single week with a written interactive report so you can see everything that's going on with your property, and I don't do that, then all of a sudden you lose a little bit of trust. If I say I'm going to pay for something and I don't pay for it, you're losing trust. If I say I'm going to be somewhere at a certain time and I'm not there, you're losing trust.
That's good. I think those are all super good strategies. And I'm sure you go over that with your team, right? Making sure that you respond in a timely manner. So do you have like a policy or a guideline of how fast you respond? Like, I need to respond to this person within this amount of time.
Yeah. So typically it's like the same day. We try to respond same day, but if it's like late in the evening, then it's the next morning.
Okay.
Yeah. And then we try to condition the like just let the clients know up front that, hey, unless it's an emergency, we're not going to respond on Sundays. Because a real estate agent can work 7 days a week, nights and weekends.
But that's good that you've clarified and communicated that with them from the beginning.
Yeah.
So that they're not having this expectation, well, why aren't you contacting me?
And most people understand you need at least 1 day off every now and then.
Yeah, exactly. So. Not you, though. Oh, my gosh. Do you take a day off? I don't know.
Yeah. Actually, Valerie and I started taking Sundays off in August. So recently, it's been a big deal for us.
I think that's good, though. I've learned a lot in this show. I got to say, I've learned a lot. Yeah, I learned a lot about how to earn trust. I think that communication factor is so key, and to not trust anything I hear. 0. Do not trust anything you hear, and only half of what you see.
There you go. It'll never let you down. It's a low bar, but it'll never let you down.
Right, there you go.